I get asked a lot of times, what tax structure should my business be? And so I have broken that down to income points that will help you figure out when is it time for you to switch to a different entity. And so most people get started in business, right? Whether it's home-based business or a brick and mortar location, and they never even put a thought to the fact that they need some sort of structure set up. And so they just start their business and now they're a sole proprietor. So a sole proprietorship means you haven't set up an LLC, you have not done anything really other than said, "Hey, I'm in business now." So let's say you went and bought a food truck and you set up that food truck and you got no paperwork. Well, now you are a sole proprietor. Then there are partnerships. So those are really sole proprietorships with two people, right? So instead of filing a personal tax return listing it as a Schedule C for your business, you now have to actually have a partnership tax return. And that's regardless if you have an LLC or not. So even if you haven't set up any structure, if you and someone else owns a business together, then you are required to file a partnership return. Both of those, sole proprietorships and partnerships, don't really save you any money as far as taxes go. They both flow to your personal tax return. So one is listed as a Schedule C, one is actually a K1 that flows to your personal tax return. But both of them require you to not only pay federal and state taxes if you live in a state that has state taxes, but you also have to pay self employment taxes.